For this firm, we are given the amount of sales, cost of goods sold, depreciation expense, but not interest expense. Additions to retained earnings. We know how many shares the firm has, and we know dividends per share. Given a 34% income tax rate, what is the times interest earned ratio? Well, to solve this problem, we need to figure out 1, the interest expense, 2, earnings before interest and taxes. We can calculate net income because we know retained earnings and we have a way of calculating total dividends. Let's first calculate cash dividends. Number of shares times dividend per share. Adding cash dividends to change in retained earnings, we get net income. Then we can get earnings before taxes. Take net income divided by 1 minus tax rate. Now, note that earnings before taxes is sales minus cost of goods sold minus depreciation minus interest. Well, in order to figure out interest, we solve it algebraically. Interest expense equals earnings or sales minus cost of goods sold minus depreciation minus earnings before taxes. If you want to check earnings before taxes or sales minus cost of goods sold minus depreciation minus interest expense times 1 minus tax rate, that should give us net income if we've done it right, and we did do it right. Now all we have to do is calculate earnings before interest and taxes, which is sales minus cost of goods sold and minus depreciation. Times interest earned ratio is simply EBIT divided by interest expense, 287.